My students often tell me, absorption costing, difficult thing. But somehow we manage it. But absorption costing and marginal costing coming together in a sum, oh my god, the deadly combination. It would be very difficult to understand. Friends, if you have this feeling, then worry no more. In this video, I will teach you the simplest trick ever to understand the difference and solve the sum. Myself, Professor CA Devangi Shah, I teach costing for CA Inter and CA Final level. Friends, do watch this video till the end and like the video. And if you have not subscribed to my channel, do it right away, because watching the video without subscribing is a big crime. I get so disappointed often that 80% of the students, those who are viewing this channel, have not subscribed. Friends, please motivate me a bit and subscribe to my channel right now. And now let us begin with the concept. Friends, there is difference between marginal and absorption costing, and the real difference and the main difference is because of the reason why they are made. Marginal costing technique is made exclusively for decision making. The objective of this marginal costing, the agenda of marginal costing is decision making. But that is so very different from absorption costing, friends. We learned absorption costing for cost calculation. Get the full cost, to get the total cost. And when the reason, the objective of the two concepts are different, how can the calculation be same? There will be difference in the profit. And what is that difference? Why is that difference? To understand it, you should know these two types of cost, that is product cost and period cost. Product cost are those costs which can be inventorized. Means it can be included in the stock valuation. Period costs are those costs which cannot be inventorized. Cannot be included in stock valuation. And friends, let us now understand what is product and period cost for marginal costing and for absorption costing. Friends, tell me, what cost do you write in cost sheet? You write material cost, followed by labor, direct expense, variable factory overheads, fixed factory overheads. Then you have admin overheads related to production in general. I'm just taking up general over here. Admin, variable admin overheads, general. Fixed admin overheads, general. Variable selling overheads and fixed selling overheads. Right? So friends, these are the costs that we find in our cost sheet. Now, out of these costs, which cost can be included in the stock valuation? Which cannot be included? So that is what we have to think. And now, first, let us think as per absorption costing. Our absorption costing, you can take cost sheet as the basis. The entire cost sheet is made based on absorption costing. I've told you this often. So, what does absorption costing include in the stock valuation? When I say stock, it means finished goods stock over here. So, in our stock valuation, it includes material cost, labor cost, direct expense, variable factory overheads, fixed factory overheads, and also admin overhead related to production, not general. So, friends, these costs are included in the stock valuation as per absorption costing, and hence, friends, these costs are called product cost as per absorption costing. And the rest, admin overheads, general, maybe variable or fixed. Selling overheads, variable or fixed, whatever it is, friends, these are period cost, and these are not included in the stock valuation. Got it? Now, let us talk about marginal costing. What does marginal costing do? Marginal costing is used for decision making. It considers only variable cost as the cost of product. It does not take fixed costs into consideration. So friends, for stock valuation as per marginal costing, material cost which is variable will come, labor cost which is variable will come, direct expense which is variable will come. Also variable factory overheads will come, but not fixed factory overheads. So only these costs are considered. And these are product cost as per marginal costing, while the rest are period cost. So friends, did you mark the difference? The difference is just one, that is fixed factory, right? They're too dark, I'm sorry. Fixed factory. This fixed factory overheads is included in absorption costing stock, but it is not included in marginal costing stock. And friends, it is because of just this single reason, simple single reason, that the two profit figures, stock value differs, profit figure. And this is the only. Got it, friends? I'll take some numbers and explain you. Suppose if all these costs are 1 per unit. All the costs are 1 per unit. So absorption costing will value it at 5 per unit, while marginal costing will take only 4 per unit. So if there are 1000 units, stock will be 5000 rupees and here it will be 4000 rupees. And friends, when stock values differ, your profit will obviously differ. Your opening stock value will be different, your closing stock value will be different. And this is a simple reason why there is the. So I'm sure that I've made the concept clear. And now we are in position to start with the sum related to marginal versus absorption. And I'm doing the sum which is a part of our ICAI book. Illustration number 18. Wonder Limited manufactures a single product, Jest. The following figures relate to Jest for 1 year period. And this data is given at 50% and 100% level. Sales in production 400, 800. Sales 8 lakhs, 16 lakhs. I'm sure you can calculate the selling price. Then variable production cost, fixed production cost, variable fixed selling cost is given. Normal level for the year is 800 units. So this is normal level. Okay. Fixed costs are incurred evenly throughout the year. Actual fixed costs are same as budgeted. There were no stocks of Z at the beginning of the year. There is no opening stock, remember. In the first quarter, 220 units were produced and 160 units were sold. Required, compute the fixed production cost absorbed by Jest if absorption costing is used. Calculate under over recovery of overage during the period. Calculate the profit using absorption costing and calculate the profit using marginal costing. And to this I will add one more. Reconcile the profit. And this sum would be an excellent sum to revise this. Okay. Now how to start the sum? Firstly, what you should do is, as I said, the difference lies in the stock valuation. So you should know your stock units beforehand before doing any damn calculation this sum. So we're doing illustration number 18 of ICI book. Let me do this. Illustration IC. Working note 1. Calculation of stock units. Calculation of stock units will be just like you make working note in your cost sheet to calculate production or sales quantity. You can make it in same manner. Opening stock is not there. Plus production quantity. Friends, production quantity is how much? In a quarter, 220 units were produced. Minus sales quantity. 160 units were sold. So there will be closing stock of 60 units. Got it? And now Let us start answering the questions one by one because we know the stock value. What will be the fixed overheads absorbed if absorption costing is used? So friends, basically they're asking you amount of overheads absorbed. It is nothing but actual production units into absorption rate. So I need to calculate absorption rate here. Working note 2, calculation of absorption rate. Here we will use the output method only. That is budgeted overheads upon budgeted output. Budgeted production overheads will be how much? 1,60,000 and 800 is a normal level as they have mentioned. So 1,60,000 divided by 800 units, your absorption rate is 200 per unit. So therefore, answer for first part, amount of overheads absorbed. Amount of overheads absorbed will be your actual output into absorption rate. Your actual output is 220 units and your absorption rate is 200 per unit. So 220 into 200, you get 44,000 as your amount of overheads absorbed. I'm sure you must have understood this. You know absorption costing well, you would have easily understood. Then calculate under or over recovery of overheads. Under or over recovery is nothing but under over absorption. We calculate it by comparing overheads absorbed with actual overheads. So friends, overheads absorbed is already calculated in first part. Actual overheads will be how much? So you need to understand this. They've given that fixed costs are incurred evenly throughout the year and actual fixed costs are same as budgeted. Okay, so budgeted cost is 1,60,000. This is for the whole year. Right? This is for 1 year. But the cost that we have calculated absorbed amount is for a quarter. So friends, overheads absorbed is 44,000 and actual overheads incurred same as budgeted as they have given. But that is given as 1,60,000. This is for the whole year. For 1 quarter, it will be how much? So we take 1/4, which will be 40,000. Why I have taken? Because for 4 quarters. So friends, overheads absorbed 44,000, overheads incurred 40,000. So what you observe is your actual overheads are less, absorption is more, so there is over absorption. Over absorption will be your absorbed overheads minus actual overhead. Absorbed overheads is 44,000. Actual overheads 40,000. You get 4,000 as your over absorption. Okay. And with this, we have answered the second part as well. Now they are asking you profits. Okay. So we come back to this. This is the real thing that I want to talk about in this. They've asked us profit as per absorption costing and profit as per marginal cost. And I told you the real reason for the difference in two is stock valuation. Okay. So friends, just think about stock. And here there is only one closing stock. If I were to do stock valuation, as per marginal costing, what I would do? So there are 60 units in stock and marginal costing does not consider any fixed cost. It considers only variable cost, that is direct material, direct labor and variable factory overheads. Okay, that these costs are product costs and these are to be included. So marginal costing would consider out of this given data, this would not come, only this will come. Right, 6,40,000, but this cost is for 800 units. So per unit it would be how much? 6,40,000 divided by 800. Friends, you get 800 per unit, right? Would take 800, nothing but 6 lakhs 40 divided by 800 units into 60. Your stock value would be 48,000. Got it, friends? Let me write a note for you. Only variable manufacturing cost is to be taken. But the same thing, same 60 units, if you were to value it under absorption costing, what it would be? 60 units into. Of course, we would take variable, but we would also take fixed overheads, okay? Fixed production overheads, which is 200 per unit. Friends, full cost is taken. Which is nothing but variable plus fixed, both. This is variable, this is fixed. So what do you get? 60 into 1000, you get 60,000. So when you make profitability statement, marginal costing would value this 60 units at 48,000, but the same stock will be valued under absorption costing at 60,000. And when the stock values differ, obviously your profit is going to be different. And let me tell you, it will be different only because of this reason. Okay. Now let's make profitability statement. Give the heading. Profitability statement. First, we will do it as per marginal costing. We'll start with sales. Sales units are how much? It is 160 units into selling price. Friends, selling price per unit is not given, but we can compute it from here. 16 lakhs is the sales value for 800 units. Per unit you get 2,000, right? So into 2,000 per unit, it will be 3,20,000 minus cost of goods sold, or you can just write minus variable cost here. Now, what is this variable cost? Friends, we have incurred two variable costs in the question. There is variable production cost and variable selling cost, and both have to be taken. Variable production cost is 800 per unit. So if I want to write stock, I would present like this. Firstly, I have produced 220 units, right? Yeah, I've produced 220 units. So my variable production cost that will be incurred is 220 units into 800 per unit. Correct? So 220 into 800 would give me 1,76,000. Then variable selling expense would be incurred only for 160 units. Right? Selling expense is always incurred only for the units that we sell. Variable selling expense is how much? Here it is 3,20,000 for 800 units. You get 400 per unit. So 160 into 400, you get 64,000. Okay. And this is a variable cost in all we have incurred. From this, we are going to subtract the closing stock. If there were opening stock, we would have added it. Closing stock, it will be subtracted. And we know how to value it. There are 60 units in stock, right? And this 60 units will be valued at only 800. Manufacturing variable cost will be taken. We've already written this note, right? 48,000 will be subtracted. So friends, what is the total variable cost that you get? You get 1,92,000. Come on friends, get the contribution. Contribution would be 1,28,000 minus fixed cost. Under fixed cost, you have production and selling. Production is 1,60,000, selling is 2,40,000. Divide by 4 quarters, get 40,000. And 2,40,000 divided by 4 quarters, you get 60,000. Total 1 lakh. So marginal costing profit is 28,000. Got it, friends? This is profit as per marginal costing. Sales, I'll just copy it from here, 3,20,000 minus COGS, cost of goods sold. Opening stock is not there, we need not write. Then production cost will be debited, right? Just imagine your trading profit and loss account when you're making absorption costing profitability statement. So we, from sales, we subtract COGS to get the gross profit. In COGS, we take opening stock, which is not there. Then we take production cost. Under that, we have variable production cost, which is 220 units into 800 per unit. 1,76,000. Then we also take fixed production units. And because it is absorption costing, we will take on the basis of absorption rate. 220 units into 200 per unit absorption rate. 44,000. So this is the cost that is to be debited. And on credit side, we will subtract the closing stock. Closing stock 60 units will be valued at 800 plus 200,000. Correct? I have explained to you this earlier. I have written this working earlier also. It will be valued at 60,000. 1,76,000 plus 44,000 minus 60,000. Friends, you get your COGS as 1,60,000. What will be your gross profit? Gross profit will be 1,60,000. And from this, you will subtract all your admin and selling cost. In this, variable cost will is how much? We have sold 160 units. 160 into variable selling cost, we just computed here, it was 400 per unit. 64,000. And fixed selling cost is 2,40,000 divided by 4 quarters, 60,000. Total cost comes to 1,24,000. So friends, what is a profit? What is the profit that you get? 1,60,000 minus 1,24,000, you get 36,000 as your profit. But then this is not your final profit, friends. We will call this as unadjusted profit. And we are going to adjust the under over absorption here. Okay? Do you remember absorption costing procedure? We calculate absorbed amount, we compare it with actual under over absorption, and then under over absorption is to be treated. Here we are going to use a technique of transferring it to costing P&L and adjusting it. So what is there? There is over absorption, we already know. There is over absorption of 4,000. And I'll explain to you this again if you want. We have absorbed 44,000, but we have actually incurred only 40,000. So 4,000 expenses recorded more. I repeat, we have absorbed 44,000, but actual overheads incurred is only 40,000. I have recorded 44,000, that is 4,000 more than is what is actually incurred. So can I say my profit is less by 4,000? Expense of 4,000 is written more. So this profit, 36,000 is less by 4,000. So in order to get the correct profit, I'm going to add here over absorption. Add over absorption, and that over absorption is 44,000 minus 40,000, 4,000. Correct, friends? And you get the final profit as 40,000. So friends, this is the profit as per absorption costing 40. Let's make reconciliation statement. We can start with any profit, absorption or marginal. Here I am starting with absorption. Profit as per absorption costing 40,000. We want profit as per marginal costing. $28,000. I have said this many times now. The difference is just due to stock value, right? You can see that stock valuation part that we did. Marginal costing took only 800. Absorption took both. The difference is due to this 200. So let's write here. Fixed factory overheads included in closing stock valuation as per absorption costing. 60 units include 200 per unit more. The difference is 12,000. And absorption costing includes this much more. Absorption costing profit is more, marginal is less, so we need to subtract this. And this, the result is in front of you. The technique is so very simple. So, thank you so much. I hope you have understood this concept. And friends, do not forget to like the video and subscribe to my channel. Download my app to get more such content. Thank you. Goodbye.